Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now in this video I'm continuing the problems on assessment of individuals. Last video two problems I have solved on assessment of individuals. So in this video third and fourth problem I'm going to explain and do the solution on the board. But before starting that problem I expect my viewers to have a printout of the problems which I have given in the link under my description. So before watching any video, always have a printout ready and take a screenshot of the solution of third and fourth problem. Then I'll explain all the points. Come on, see the third problem. Problem number 3. The following particulars relate to Srimati Chandrika for the previous year 2021. Calculate total income. So only we have to find out the total income of the SSC, Srimati Chandrika. Salary received 27,800 per month. Profession tax paid 100 rupees per month. See here, income from salary. The SSC is having income from salary. So under income from salary, all allowances, perquisites, everything will be there. But in our problem, we are not given any allowances. We are not given any perquisites. We are given only basic salary. So salary received is 27,800 per month. We have to compute income from salary. Remember, first we have to calculate gross salary. So salary, allowances, perquisites, profit in lieu of salary. The total of these four items is called gross income from salary. From gross income from salary, deductions are available under section 16. The first deduction is deduction under section 16, 1A, that is standard deduction, 50,000. Section 16.2, that is EA deduction. That EA deduction will be given only if EA is there. In our problem, there is no entertainment allowance, so no EA deduction. Then 16.3 is for profession tax paid. Yes, there is profession tax paid 100 rupees per month. So 100 into 12, 1200 rupees is the profession tax. Now see here, computation of total income of Srimati Chandrika for the assessment year 21-22. Income from salary. Salary received 27,800 per month into 12. It comes to 3,33,600. This is the salary for 1 year. From this, we deduct the deductions under section 16. The first standard deduction under section 16.1, that is 50,000. Actually, the standard deduction will be least to the following two, that is gross income from salary or 50,000, whichever is less. Here, gross income from salary is 333,600, whereas fixed amount is 50,000, whichever is less, 50,000 is less. Profession tax paid under section 16.3 is 100 rupees per month into 12, 1200. Now bracket denotes subtraction. So 333,600 minus 50,000 minus 1200, you will get 2,82,400. This is the income from salary. Next, rent received from the house, 12,000 per month. That means income from house property. We have to compute because rent received is given. So actually for computing income from house property, we need GAV, gross annual value, which is higher of the following: municipal rental value, fair rental value, actual rental value. But here in our problem, no information is given regarding municipal rental value, no information regarding fair rental value. Actual rent is given 12,000 per month. So whatever actual rent is there, that itself is the GAV. That itself is the gross annual value. So GAV, rent received 12,000 per month into 12, 1,44,000. Municipal taxes are not given in the problem. So I have written municipal taxes nil. So net annual value is 1,44,000 NAV, net annual value. From this, two deductions are available, maximum only two deductions. That is standard deduction under section 24A and interest on loan taken to purchase the house or construct the house, 24B. But in our problem, 24B is not there, interest on loan is not there. So only standard deduction will be allowed under section 24A, that is 30% of NAV. So here standard deduction under section 24A, 30% of NAV, 30% of 1,44,000, 43,200. So 1,08,000 rupees is the income from house property. So we have computed income from salary, income from house property. Next item is during the previous year, she sold gold ornaments for rupees 9,20,000. Selling expenses 0.5%. Cost of the ornaments in January 2005 is 2,46,800. CII, cost inflation index, is 113, and 2021 cost inflation index is 301. The current previous year, the cost inflation index is 301, and the index number of the purchase year is 113. By using this, we have to compute long-term capital gain. Because the asset was held for more than 3 years. It was purchased in 2005 and sold during 2020-21. Current previous year is 2021. So during this 2021, it was sold more than 3 years. So it's a long-term capital gain. So we compute capital gain. Consideration received 9,20,000. This is the consideration received. Less selling expenses 0.5% given in the problem. So 0.5% of 9,20,000, 4,600. Deduct 4,600, 9,15,400 net consideration. From net consideration, deduct indexed cost of acquisition. Indexed cost of acquisition, how to find out? Already in capital gain chapter I have explained. If you are not sure, go to the playlist of my channel. Select the subject income tax. And you will get the videos on capital gain. Watch that video, capital gain. You can be able to know how to compute capital gain. So indexed cost of acquisition, actual cost 2,46,800 given, actual cost. To this we multiply the fraction. That fraction is index number of current previous year divided by index number of the year of purchase. So current year previous index number is 301. And the index number of the purchase year is 113. So 301 by 113 will get 6,57,405. This is called the indexed cost of acquisition. Now deduct 9,15,400 minus 657,405, 2,57,995. This is the LTCG, long-term capital gain on the sale of gold ornaments. Now income from other sources. So it is given interest on bank deposit 36,400. And how we got 36,400? On fixed deposit 30,000, on saving bank 5,000, on recurring deposit 1,400. So he is having different types of bank deposits. That is fixed deposit, saving deposit and recurring deposit. On all the deposits he got interest. So interest on bank deposits, on fixed deposit 30, on saving bank 5, on recurring deposit 42. The total is 36,400. That's all. All the incomes we have taken. Now you take the total and find out gross total income GTI. 2,82,400 plus 1,08,000 plus 257,995 plus 36,400. The gross total income is 677,595. This is the GTI. From GTI, deductions are allowed under section 80. So what are the deductions? See here. Mediclaim premium for herself 11,000 and for dependent children 9,000. And qualified saving under section 80C is 1,61,400. Only two deductions are given, 80C and 80D. 80C is the qualified saving. It is given 1,61,400. But last video, theory video, I have explained you that the maximum deduction under section 80C is 1,50,000. So here, even if he deposits, even if he saves 1,61,400, he will not get 1,61,400. He will get a maximum deduction of 1,50,000. So deduction under section 80C, qualified savings 1,50,000. Next, mediclaim premium. Medical insurance premium paid on the own life, on the life of the spouse, or on the dependent children, that will be allowed as deduction under section 80D. So here she has paid mediclaim premium 11,000 and for dependent children 9,000. Both are allowed. The 11,000 plus 9,000, 20,000 will be allowed as deduction under section 80D. So 80D, Mediclaim insurance, 11,000 plus 9,000, 20,000. That's all the points are over. Now one point you have to remember, one more deduction is there under section 80TTA. This 80TTA will be allowed for those SSCs, non-senior citizen SSCs, who are having interest from saving bank deposit. If a person is having interest on saving bank deposit, he will get deduction under section 80TTA, provided the SSC should be non-senior. Here nothing is given, so we assume non-senior. So he will get a deduction under section 80TTA. How much? Least of the following two. Actual interest received or 10,000 rupees fixed by Income Tax Act. Whichever is least. The actual interest received. See here how much is the saving bank interest. Here you can see on saving bank interest 5,000. So actually the SSC received 5,000 rupees interest on saving bank, not on FD and not on recurring deposit. No deduction will be allowed for fixed deposit and recurring deposit. Deduction will be allowed only for saving bank deposit. So saving bank 5,000. So 5,000 or 10,000, whichever is lower, will be allowed as deduction. So 5,000 is lower. So deduction under section 80TTA, interest on SB deposit 5,000. Now take the total 150 plus 20 plus 5, 175. Deduct 1,75,000 from this GTI. GTI minus deductions will get the total income. The total income 5,02,595. That's all. I've explained all the points. Remember, I told you in the previous video also, whenever you watch the video on income tax, always keep a notebook beside you. Whatever I'm explaining, each and every point, you should make a note of it. Then only in the coming problems you will not commit the mistake, you will not forget it. Otherwise, if you simply watch and listen the video, you will not be able to understand. You will not get the complete command on the topic. Next, fourth problem. Sri Hanumant Rao submitted the following particulars of his income, savings and other expenses for the previous year 2021. Compute his total income and tax liability. So in this problem, both you have to find out total income as well as tax liability. One by one you see. Income from salary. Previous problem, salary received was given. So we have computed income from salary by giving deductions under section 16. Here you can see salary received less deductions. Because in the problem, salary received is given. But in this problem, salary income is given. That means already deductions are given. Already income from salary is computed. Directly we should take. So you can see. Computation of total income of Sri Hanumant Rao for the assessment year 21-22. Income from salary directly 3,87,000. Directly I am taking because it is already computed. Next, loss from self-occupied house. First of all, loss from self-occupied house should be deducted from profit from let-out house. Now check, is there any let-out house? No. Let-out house is not there. So intra-head set-off we cannot make. We have to make inter-head set-off. That means the loss of self-occupied house can be deducted from income from salary. So 3,08,500. Next comes short-term capital gain on sale of land, 1,92,000. The short-term capital gain is taxable. Short-term capital gain on sale of land, 1,92,000. Then income from other sources, 18,000. You can see income from other sources, 18,000 I have taken. Contribution to PF, this will qualify saving under section ADC. Repayment of house loan, that will also qualify for deduction under section 80C. Then son's college fees, that is also allowed as deduction under section 80C. Then annuity payment to LIC, pension scheme, that is 80CCC. Deduction will be allowed under section 80CCC. Then mediclaim premium paid in cash. Actually, medical premium paid will be allowed as deduction under section 80D, provided it should be paid other than cash. It should be paid through check. If medical insurance premium paid in cash, it will not be allowed as deduction. So after completing the solution, you should write the note. Mediclaim insurance premium paid will not be allowed as deduction. No deduction under section 80D if it is paid in cash. Then donation paid 6,000 under section 80G, 50% deduction rate directly given. Donation given is eligible under section 80G, but the rate of deduction is 50%. So 50% of 6,000, 3,000 deduction will be allowed. Last and final item, long-term capital gain on sale of gold. The SSC has sold gold and gained long-term capital gain of 48,000. That's all the points I have taken. Now one by one solution I will show you. Income from salary less income from self-occupied house, capital gain, short-term capital gain on sale of land 1,92,000, long-term capital gain on sale of gold 48,000. Actually, long-term capital gain is a special income on which flat rate of tax 20% will be applied. But only for the sake of calculating total income, we are including LTCG. For finding out total income, we are including LTCG. Later on, when we calculate tax liability, we should separate it. Because LTCG, there is a flat rate of 20%, whereas other incomes, there is a slab system. Right? Now, the short-term capital gain on sale of land 192, long-term capital gain on sale of gold 48, total 2,40,000. Other sources, income from other source 80,000. Now GTI, gross total income is 5,66,500. We got the GTI. From GTI, deductions under section 80. So deductions under section 80. The first deduction is under section 80 CCE. When we apply the CCE, when a person is having deduction under section 80C and 80CCC. In our problem, the SSC is having deduction under section 80C and also under section 80CCC. This 80CCC is allowed when a person deposits some amount in pension fund of LIC. Pension fund of LIC. Then he will be allowed deduction under section 80CCC. And only 80C qualified saving like contribution to PPF or housing loan repaid or children's school fees paid. So these will be qualified saving under section 80C. So 80C and 80CCC should not exceed 1,50,000. There is a restriction given under section 80CCE. What restriction has given by 80CCE? That the total of 80C and 80CCC should not exceed 1,50,000. So I'll explain you in detail regarding this 80CCE in working note. First of all, deduction under section 80CCE 1,50,000. How we got it, I'll explain in the working note. Next is 80G. 80G donations. Donations. 50% of 6,000 is 3,000. One, medical insurance premium paid will not be allowed as deduction because it is paid in cash. That in working note you should write. In examination, after completing the solution, write on. You should write on. Medical insurance premium paid in cash will not be allowed as deduction. That's it. So after deducting 1,53,000, the total income is 4,13,500. So we have computed the GTI. From GTI, deduct the deductions under section 80, we got total income. Now we separate total income into special income and normal income. Because special income, there is a flat rate of tax 20%. Normal income, slab system. So total income is 4,13,500. From 4,13,500, deduct the special income, LTCG. How much is the LTCG? 48,000. Deduct 48, 3,65,500 is the normal income. So first we calculate tax on normal income. Up to 2,50,000. Income is 2,50,000, no tax. The second slab goes from 2,50,001 to 5 lakh. But is our income going up to 5 lakh? No, our income is only 3,65,000. So we take the balancing figure. Balance 3,65,500 minus 2,50,000. 1,15,500 is the balance. On this balance, the rate of tax is 5%. So 5% of 1,15,500, 5,775. So tax on normal income is 5,775. To this we add tax on LTCG. How much is the tax on LTCG? 20% of 48,000. it comes to 9,600. Add up 15,375. From this deduction, rebate under section 87A, because the total income is below 5 lakh rupees. The total income is below 5 lakh rupees, so rebate under section 87A is allowed, 12,500. Deduct 12,500, 2,875. Now to this we add health and education cess, 4%. So 4% of 2,875, 150. So 2,990. This is the tax liability. So in the problem it is asking you what is the total income and what is the tax liability. Total income is 413,500 and the tax liability is 2,990. That's it. Now the main complicated part in this problem is deduction under section 80 CCE. How we got CCE? This one, CCE. I have given the complete explanation, step by step. The first step, calculating the qualifying amount for each saving. Calculating the qualifying amount for each saving. Here he is having 3 savings. The first saving, contribution to PPF. Second saving, housing loan repaid. Third, children's school fee paid. So these 3 are the qualifying amounts. So for each one, first, contribution to PPF, least of the 2 qualifies. Actual amount paid or fixed amount of 1,50,000. Whichever is least will qualify. The actual contribution to PPF 1,30,000 given in the problem. Fixed amount 1,50,000, whichever is least, 1,30,000 qualifying amount. Qualifying amount for contribution to PPF. Similarly, what is the qualifying amount for housing loan repaid? Repayment of house loan. Actually, it is given repayment of house loan 1,15,000. But in this 1,15,000, interest is included 78,500. So Income Tax Act says interest will not be allowed as deduction. Only principal repayment will be eligible for deduction under section 80C. So total repayment 1,15,000 in which interest is included. So deduct the interest, remove the interest. 78,500 you remove. 36,500 is the qualifying amount for repayment of house loan. Third one, son's college fees. That will be allowed as, that is a qualified saving. So that I have taken 12,000. So total is 1,78,500 is the gross qualifying amount. It is called calculating gross qualifying amount. Gross qualifying amount is 1,78,500. Now step number 3, calculating the deduction. The deduction is least of the following 2. Actual qualifying amount, gross qualifying amount or fixed 1,50,000. The gross qualifying amount 1,78,500. The fixed amount allowed is 1,50,000, whichever is least. So 1,50,000 is the deduction allowed. So deduction under section 80C is 1,50,000. Now deduction under section 80CCC is equal to amount payment to LIC 14,500. So apart from 80C, he is also getting the deduction under section 80CCC, that is payment of pension fund to the LIC 14,500. So 1,50,000 deduction the assessee is getting on 80C and 14,500 is the deduction the assessee is getting under section 80CCC. But one more section is there under section 80CCE. This section CCE says the total deduction under section 80C and 80CCC should not exceed 1,50,000. One more restriction has been placed by 80CCE. So here the deduction under section 80C is 1,50,000. 80CCC is 14,500. So it is more than 1,50,000. But CCE says the deduction should not exceed 1,50,000. So only 1,50,000 deduction will be given. That's it. So this is the end of problem number 4. So in this video I have completed 2 problems, third and fourth. Inshallah, 5th problem will continue in the next video.